My name is Chris Campbell. I'm a practicing CPA, and I work with small businesses and individuals to help them pay the least amount of taxes possible while keeping them out of jail. So I read an article that the IRS will be utilizing AI to crack down on a select number of millionaires and large partnerships in an effort to collect back taxes. And I don't know if it's necessarily back taxes, but more so to collect additional taxes. It seems like they want to follow up on those who might have, at least according to the IRS Commissioner, said those that have cut corners. So essentially, it means that they want to audit returns of those select millionaires and large businesses. They're going to conduct more audits and be more stringent upon what was filed. So they're going to have more scrutiny on these returns. I reached out to a few of my clients about it to talk them through some of the things that they might expect or things that we may want to look out for. So I wanted to share some of those things with you, go over some of the things that I think may trigger some of the audits and methods that I think that they'll use. And with the advent and the rise of AI, they can sift through data a lot faster so that you don't pop up on the radar, if not in the past, for years to come. So the first thing I think they'll be looking at are cash-based businesses. We're moving more towards a cashless society, so it may not be as much anymore, and the convenience of just paying on card works, but cash-based businesses. So your restaurants, maybe some retailers seem to be the big culprits there. I think the IRS will analyze and compare the supplies and food expenses versus the sales, and they'll determine what that percentage, what that ratio is, and I think they'll use some sort of standard as far as what that range should be. And if you're not within that range, then the IRS will probably come and take a look to understand why your sales to supplies, cost of food ratios are not lining up. So I think that's going to be one thing. The other thing I think they'll take a look at are those partnerships and or individuals that have foreign business dealings to avoid offshoring, parking money overseas in lower tax countries or sourcing them there when it should be sourced here versus in the tax favorable countries. So I think that's another thing that they're going to pay more attention to. The other thing are late filers. So if you're a perpetually late filer, I think that's going to raise another flag, and I think they're going to wonder why you're filing so late. I think they're using the threshold 250K. So if you are in that income bracket and you have a propensity for filing late, I think that will be another reason for the IRS to give your returns more scrutiny. The other thing to take a look at are businesses that claim high or disproportionate travel and meals and entertainment. Now, as of recent, I think it's with the tax law change in 2018, entertainment is no longer deductible. Meals are, but entertainment is not. So for those that might have a higher or disproportionate amount that fall under the meals and entertainment expense, I think they'll take a look at folks who are still claiming the entertainment portion of it. Because prior to 2018, that was a go, that was okay. You can deduct up to 50% of it. Now it's just the meals. And it's 50% of just the meals. So they'll probably have their ratios of what they think it should be. And if you fall outside of that, I think they're going to take a look at that. They want to make sure that you're not deducting lavish meals and vacations. So that's another thing to consider. If you're a part of a partnership, I think another issue is going to be the unreimbursed partnership expenses. That is another good way folks can hide personal expenses. It creates a very easy way to do that. So for those that are in that bracket and you have a higher proportion of those unreimbursed expenses, they're going to take a look at that. So those are the main things that I think will trigger the additional audits. I believe the threshold is if you're a millionaire and or if you owe 250K or more in taxes. So those are things that kind of you'll want to take a look out for. And if you fall in this category, just tighten up your records. If you have your legitimate expenses, then just make sure it's documented properly so that it can stand up in an audit. So that's all for now. If you have any more questions about this topic or any other tax or accounting related questions, feel free to reach out. I'm happy to help. All right, that's all for now, and I'll see you on the next one.